Hello and welcome to the channel. Today we are going to have a fresh topic. That is, we are going to talk about some banking and finance abbreviations and their expansions. While watching this video, you please subscribe this channel and like the video and share the possible contents and put your comments also. And let's look into the abbreviations. Now let's start with ACU, Asian Clearing Union. The Asian Clearing Union was established in December 9, 1974 at the initiative of the United Nations Economic and Social Commission for Asia and the Pacific. It is a payment arrangement between the central banks of Bangladesh, Bhutan, India, Iran, Maldives, Myanmar, Nepal, Pakistan, and Sri Lanka. It is headquartered at Tehran, Iran. AD, Authorized Dealer. RBI describes ADs, authorized dealers, are entities authorized by the Reserve Bank under Section 10 of the Foreign Exchange Management Act 1999 to deal in foreign exchange of foreign securities. AML, Anti-Money Laundering. Anti-money laundering is the execution of financial transactions to eventually convert illegally obtained money into legal money. ASEAN, Association of Southeast Asian Nations. These are organizations comprised of 10 nations like Indonesia, Vietnam, Brunei, Thailand, Laos, Myanmar, the Philippines, Cambodia, Singapore, and Malaysia, which this organization was established in Bangkok, Thailand on August 8, 1967. Assets Asteroid, Anonymous System for Trading in Rupee OTC Interest Rate Derivatives. AUD, Australian Dollar. AUM, Assets Under Management. Assets under management means total market value of the investments managed by a person or entity on behalf of investors. It is usually said in relation to mutual funds. BIS, Bank for International Settlements, which was established in 1930, is owned by 63 central banks around the world. Its head office is in Basel, Switzerland, and has two representative offices, one in Hong Kong and one in Mexico City. BISIP, Bank for International Settlements Investment Pools. BOP, Balance of Payment. BOP, Balance of Payment, is the method by which countries measure all of the international monetary transactions within a certain period. BPS, Basis Points. These are a unit of measure used in finance to describe the percentage change in the value or rate of a financial instrument. BRICS, as we know, it's an association of Brazil, Russia, India, China, and South Africa. It is primarily an economic association of these nations. BSA, Bilateral Swap Arrangement. These are arrangements whereby two central banks of two nations agree to acquire each other's currency in exchange for its own, either up to a pre-agreed limit or in an unlimited amount. For example, India and Japan have such an agreement. BSL, Bilateral Swap Lines, is almost same as Bilateral Swap Arrangement. CAC, Capital Account Convertibility. Convertibility refers to the ability to convert domestic currency into foreign currencies and vice versa to make payments for balance of payments transactions. Capital account convertibility is the ability or freedom to convert domestic currency for capital account transactions. CAF, Common Application Form, which is required to be filed by the foreign investor desirous of investing in India as an FPI, Foreign Portfolio Investor. CBDC, Central Bank Digital Currency. CBDCs are a form of digital currency issued by a country's central bank. They are similar to cryptocurrencies except that their value is fixed by the central bank and equivalent to the country's fiat or sovereign currency. CBSL, Central Bank of Sri Lanka. CCIL, Clearing Corporation of India Limited. CCIL was established in April 2001 to give guaranteed clearing and settlement functions concerning transactions in government securities, money, derivative markets, and foreign exchange. CIPS, Cross Border Interbank Payment System. CIPS, Cross Border Interbank Payment System. In 2015, China launched the Cross Border Interbank Payment System, CIPS in short, to clear and settle transactions in renminbi and facilitate the use of the currency in international business. CKYCR, Centralized KYC Records Registry. The CKYC, the Central Know Your Customer Registry, is a centralized depository of KYC documents of customers availing various services for the financial sector. It is created with an intention to reduce the burden of submitting KYC documents for verification when starting a new financial relationship with a new finance company. CLS, Continuous Linked Settlement, is an initiative by a consortium of the world's largest foreign exchange clearing banks to mitigate the or to address the risk of loss of principal associated with the settlement of foreign exchange trades, often known as foreign exchange settlement risk. CMIM, Chiang Mai Initiative Multilateralization, is a multilateral currency swap arrangement among the 10 members of the ASEAN nations, the People's Republic of China, including Hong Kong, Japan, and South Korea. Now let's look into CNH, Chinese Yuan offshore, and CNY, Chinese Yuan onshore. What is CNH and CNY, and what are the main differences? CNH refers to the Chinese yuan in the offshore market, which is outside of mainland China, the onshore market. China's capital markets, including the FX foreign exchange market, are controlled and not fully open yet. This leads to different features of the Chinese currency in the offshore and onshore markets, and thus two tickers are assigned to distinguish them. In the onshore mainland China market, the Chinese yuan is called CNY. On the other hand, the offshore market includes traditional yuan centers such as Hong Kong, that is a special administrative region of China, Singapore, London, and newly developed centers such as Luxembourg. COFER, Currency Composition of Official Foreign Exchange Reserves. It's a foreign exchange reserves data released quarterly by the IMF in its currency composition of official foreign exchange reserves. The primary reserve currency used worldwide is the US dollar, followed by euro, that is the official currency of the eurozone, and then the British pound. Then comes the Japanese yen and the Swiss franc, etc. COMESA, COMESA, Common Market for Eastern and Southern Africa. Then CPS. CPS, Centralized Payment Systems. In India, these are real-time gross settlement, RTGS, and National Electronic Funds Transfer, NEFT systems, both are owned and operated by Reserve Bank of India. CRR, Cash Reserve Ratio. In simple terms, the cash reserve ratio is a certain percentage of cash that all banks have to keep with the RBI as a deposit. The percentage is fixed by the RBI and is changed from time to time by the central bank itself. DDP, Designated Depository Participants. This refers to custodians of securities who are registered with the SEBI, Securities and Exchange Board of India. Prominent banks such as Axis Bank, HDFC Bank, JP Morgan, Chase Bank, etc. are designated DPs, depository participants. DEIO, Department of External Investments and Operations. This is a wing of the Reserve Bank of India. Functions of it are investment and management of the foreign currency and gold assets of the Reserve Bank of India and handling external transactions. DEPR, Department of Economic Policy and Research. DEPR is a knowledge center for macroeconomic policy research at the Reserve Bank of India. This is responsible for providing research inputs and updating management information systems MIS on macroeconomic and financial issues for policy related decision making. Next is DFIA, Duty Free Import Authorization. It's a duty exemption scheme. In simple terms, it incentivizes input imports to manufacture of export product with normal allowance for wastage such as fuel, energy, catalyst, etc. The scheme is in existence since 1st May of 2006 and helps manufacturers reduce costs. DGFT, Directorate General of Foreign Trade. This is the agency of the Ministry of Commerce and Industry or the Government of India responsible for administering laws regarding foreign trade, both imports and exports. DOR, Department of Regulation. DOR is the nodal department of the Reserve Bank of India for regulation of commercial banks for ensuring a healthy and competitive banking system, which provides cost effective and inclusive banking services. ECB, External Commercial Borrowing. External commercial borrowing or ECBs are loans in India made by non resident lenders in foreign currency to Indian borrowers. They are used widely in India to facilitate access to foreign money by Indian corporations and public sector undertakings. ECU, European Currency Unit, is a basket of the currencies of the European Community member states used as the unit of account of the European Community before being replaced by the euro. EME, Emerging Market Economies. Emerging market or an emerging economy is a market that has some characteristics of a developed economy but does not fully meet its standards. This includes markets or economies or countries that may become developed markets in the future or were in the past. India is an example of an emerging market or an emerging economy. EPCG, Export Promotion Capital Goods. This is a scheme introduced by the Directorate General of Foreign Trade, Ministry of Commerce, the Government of India. The objective of the Export Promotion Capital Goods scheme is to facilitate import of capital goods for producing quality goods and services and enhance or increase India's manufacturing competitiveness. The scheme allows import of capital goods for pre-production, production and post-production at zero customs duty. FAR, Fully Accessible Route. The Reserve Bank, in consultation with the Government of India, introduced a separate channel called the Fully Accessible Route or FAR for non-resident investment in Government of India. This move follows the Union budget announcement that certain specified categories of government bonds would be opened fully for non-resident investors without any restrictions. FATF, Financial Action Task Force. The Financial Action Task Force on Money Laundering, FATF, is an intergovernmental organization founded in 1989 on the initiative of the Group of Seven Nations to develop policies to combat money laundering and to maintain certain interests. In 2001, its mandate was expanded to include terrorism financing also. It sets international standards that aim to prevent these money laundering and terrorist financing activities and other illegal financial activities that harm the society of the world. FCA, foreign currency assets. FCA is the largest component of the forex reserve of any country, and it is expressed usually in dollar terms. FCA include investments in US Treasury bonds or Treasury bills of other selected governments, deposits with the foreign central banks, foreign commercial banks, etc. FCSOIS, foreign currency settled overnight indexed swap. The OIS is a swap derived from the overnight rate, which is generally fixed by the local central bank.